Well, good morning. Entrepreneurial News Minute, November 11th, 2024. Happy Veterans Day. My name is Phil Greenwood, University of Wisconsin-Madison, Wisconsin School of Business, Emeriti Professor in Entrepreneurship and Strategy. Okay, I saw this item today in the Wall Street Journal. It's kind of related to entrepreneurship, but it was written by Spencer Jacob, November 11th, and it talked about how much cash that Berkshire Hathaway, Warren Buffett's company, is accumulating. They've been selling a lot of different stock and have over $300 billion in cash on hand. And one of the things that the article highlights is it valuation related? In other words, Buffett has what they call the Buffett indicator, which is kind of, in general, the market value of all the stocks in the market divided by the economy, or the gross domestic product. How the article calculates it is it takes the market value of the Wilshire 5000 index, which is an index of 5,000 stocks, and divides it by our gross domestic product for the past year. And it comes up with the Buffett indicator, which at this point in time is over 2 times the gross domestic product. Now, in Buffett's terms, that would be an incredibly overvalued market, that there's a probability for correction, meaning going down. So that's one of the thoughts given to why he's accumulating so much taxes. But I've got some other thoughts. It is similar to the tech bubble. Anybody who lived through that in the late 90s, early 2000s realized that stocks just got way out of hand. We headed there, kind of, but a couple things to note. So much of the market value is tied into those 7 to 10 stocks, tech stocks, Tesla and so on, but still something to think about. Could it be? Of course. Warren Buffett's been more successful than most in the investment world. You got to take what he says, not verbatim, but at least use it as a good indicator or as a potential indicator. He's a smart guy. He's been doing this a long time. He got smart people with him. When Charlie Munger was with him, they were even more formidable, but always good to listen to people like that. Something else to think about, I don't know if the article really hit on this, was maybe he was positioning for the election, not knowing what the outcome was going to be. Thinking about taxes, I mean, one of the things that the one side was talking about was taxes on unrealized gains in the portfolio, meaning if you held a stock and you saw a tremendous increase in value, they would tax you on that value as a capital gains, even though you didn't sell it. Right now, you have just realized capital gains or losses. You'll only recognize the taxes on a stock investment when you sell the stock. So that could be. Also, he may be very concerned about this tariff situation. Now, they had a pretty heavy investment in Apple, and with Apple having a pretty sizable portfolio in China, he might have been very very worried about that. If all the tariffs go into play like we're going to, could we be headed toward a trade war? Another thing that I don't think really was touched on in the article, but I would be thinking about, is maybe he thinks that interest rates are going to stay higher longer, which means, hey, I can get 5, 6, 7% in some less risky investments. We'll just wait until things calm down or the market goes down and go in to buy. But that's what Warren Buffett does. He raises lots of cash when he thinks valuation gets too high. And if all of a sudden there's a correction, the market goes down 10, 20% in a short amount of time, he jumps in and buys like crazy. I always like to listen to people like this. They, again, don't know everything, but they know a lot. They have a lot of background, and it's always good to use them as an indicator. One additional thing, and I hope people who watch this think about, these gentlemen on the far right, you'll see the picture. Those are Senator Smoot and Congressman Hawley. I don't know which is which, but just be aware of what happened when they put in place their tariffs in the late 1920s, early 1930s. I guess 29 was when they were enacted. Was it the cause of the Great Depression? Economists and historians argue about that, but I do believe what they do agree upon is once these tariffs were put in place, then there became a big trade war. Everybody else put tariffs on stuff, and then exports just went out the window, and it just led to an exasperating problem with the markets and unemployment, and just made it worse. So think about that with tariffs and taxes. There's always consequences. We don't know exactly what it's going to be all the time, but you want to be cognizant of it, be able to recognize it, and be ready to move in case things do change. Have a great day.